What are
Right?
some simple ways to lower my taxable income of 100K?
Okay. It depends. It depends a lot on the character of that income. If you're getting 100K as an employee, then as an employee, they get you upfront, right? Under the Withholding Act of 1943, this was passed during World War II to pay for the war, and we're still dealing with it 80 years later. They take your money as you get paid, right? So it's effectively you cannot get that money back. What you can do is you can do your contributions. You can contribute to a retirement plan, a 401k, a 403b, 457, that kind of stuff. You might be able, if you don't have those, you can contribute to an IRA, a traditional IRA. You might be able to contribute to a health savings account, HSA, if you have a high deductible health plan, which pretty much all of them are nowadays. That didn't used to be the case. So you can do that kind of stuff. If you have a day job and a side business, sometimes that side business can be leveraged against that day job income. There are guidelines as far as how much you can achieve there. So yeah, you can talk about charitable deductions. You can talk about all these other kinds of things. So that's if you're an employee. If you are a small business person, whether you're a 1099 contractor or you have your own formal small business and have other people working for you, then the doors open much more widely because again, the difference between an individual and a company is an individual earns gets taxed and then spends what's left. Company earns, spends, and then gets taxed on the remainder. Critical difference in order of steps there. If you're on the company side, all kinds of things you can do. You can do accountable plans, you can do summit strategy sessions, you can look for different kinds of tax credits, you can do leverage spending. Every at the end of the year, I always see these YouTube things of you should buy a plane because the tax deductions, right? Yeah, that does actually work if you buy a business asset like that and you're using financing to acquire the thing, you still get to write off the whole value of the thing, caveats with all that kind of stuff. But effectively, by leveraging finance, you're able to capture a tax deduction that you didn't have to spend that equivalent amount of cash for. All kinds of stuff comes in there. Yeah, so I don't want to say sky's the limit when you're on the business side earning that 100K, but you have a much higher degree of flexibility when it comes to that taxable impact on that 100 grand. That is a large part of what we do.
Right.
That's a good question. All right.